All right. Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for September 22nd, 2025. We are recording this at 4 p.m. Eastern Time, and this is episode number 495. My name is David Cosmeter. I'm the creator of TimingResearch.com, and I have a great expert panel for us today. Um, so here with us is Erik Gebhard of AltaVest.com and Harry Boxer of TheTechTrader.com and Michael Filighera of LogicalSignals.com. And Jim, the option professor, is back to moderate, so I'm going to turn it over to him.
Okay, thanks, guys, and thanks for being here, everybody. We are having a very good Monday as we go into the close here. Lots of buying, and we're going to ask you guys where you think it might go. My feeling was is that as we go into the end of the month, that window dressing thing, where the managers are not going to go back to the clients or their bosses and say they were underweight stock all September. So I was wondering if you guys thought that that might have a big effect between now and Friday or early next week. I'll start with Harry. Harry, what do you think about window dressing here going into the end of the month?
And, of course, it's always possible, and it might even be probable. But quite frankly, I've been warning my people for 2, 3, 4 days now. Every advance, except for even this morning, if you see the market was up, and yet advance declines were negative by 2, 3 to 1 at one point. It was amazing. Yesterday, with the market closing sharply higher, 2 to 1 declines over advances, 2 to 1 declining volume over advancing volume. It's a very thin market, and when you get there, usually you see this at the top of every market. I'm just
Yeah.
saying that this can, as Joe Granville once said, the market always goes further than you think it's gonna, and this thing could go on for days, maybe even weeks.
Yeah.
I doubt it. But at any
Yeah.
moment now, this market could turn down and turn
Yeah.
down with a real net negative volume too.
Yeah.
I'm very concerned.
But it could be, 50 or 100 points higher the way it goes. You know what I mean?
Hmm.
But whenever you get an evidence, and I know you're a technician, Harry, when you get evidence, you're not going to take a second look at it. Any kind of evidence of a turn would be
But
something to take advantage of. Huh?
right, but I also told all my people, do not stand in front of a runaway freight train. If you go short now, you're crazy until
Yeah.
you get the break, then you get the first rally. If the rally's a weak one and it fails at resistance, and then starts to roll over, that's the time to short.
That's
Because
where you get the big move.
you usually get at least 5 ways down, and if you get a 1, 2, then 3, 4, and 5 can be very productive on the downside.
Eric, what do you think between now and the end of the month? Are we going to get another little squeeze going here, or what do you think?
With the month-end markup, is that what they call it?
Yeah. Yeah. Well, it's and it's quarterly too.
Yeah, absolutely. I like what Harry had to say, and maybe I'll put it in my own words. If you're already substantially bullish, I think you should be taking some money off the table here and lightening your load. And that's not to say we can't continue pressing higher. I mean, I think the top 10 in the S&P, the top 10 largest market cap companies are now making was it 50.5%. I just read this morning of the market movement contributing to, you know. So I mean there's that's been happening for a long time. It's not new. And it's actually just getting bigger. I don't think it's necessarily healthy in the long run, but that's where we are, and I guess it's not totally unprecedented. I mean, if you look decades back, I think there's been periods like this too.
Yeah.
But still,
Did you see? You saw Nvidia and Apple today? They're up like 10 points each, and that's
exactly.
probably 40% of the S&P or something.
Exactly. So, um, I wouldn't, I wouldn't want to buy here and add any new bullish positions. And at the same time, it's not to say I would go short either. So if that makes sense.
You're not rushing to the credit call window.
No, no, I think that there's maybe some non-directional strategies you could put in place here. You've got looking at the VIX was up today with the market
Mhm.
higher. And volatility is volatility, whether it's up or down.
Right.
So, but meanwhile, you're looking also at, I don't know, looking at this chart, I'm just glancing at quite simply look at the RSI. RSI doesn't often get to 75 on the S&P.
They're handing out ice for the nosebleed that it's getting.
Yeah. So, that's oversimplifying it, but
So
sometimes it's effective to just pay
yeah.
attention to something that simple.
And the other thing to keep close tabs on is gold and silver are out of control, and usually they go opposite. They're like they used to be defensive areas where
Yeah.
the market's going to go down. We're going to buy some gold for protection. Now, gold has gone crazy the last few months, as
It
you know,
is.
yeah, Jim.
I
We've been
just
talking
wanted
about
to,
it.
yeah, I didn't want to jump ahead on my song sheet here. You know what I mean? So,
No, I
you know,
got you, but I'm
yeah,
just saying.
you
I'm just
want to
saying.
hear that one song? You know what I mean? I'm trying to play the whole album here.
But take a look at
Uh,
every gold chart is at the top of the channel. And
well,
over
yeah, we're
the
going to do that in about 2 minutes, right after
okay,
Michael goes into his Elliott wave analysis on the S&P. That's the sequence. You guys said it looks like it could be a good period, but if Michael could put up his charts and maybe do some counting for us, maybe he could help us figure out if the Elliott wave is indicating anything we should be aware of.
Okay, I'm
Michael,
going to go to that one.
thought that
Share.
might be interesting, right?
Yeah, I think it could be. And
Yeah.
that's the ES. I'll go over to the SPX,
Yeah.
importantly. I think, let me move this out of the way so I get my full chart. I haven't filled it in yet for today. But what I think is that, so we got a small fourth wave there, and we're in a fifth wave up, and we're in a fifth wave within that fifth wave up. And there's my target, 67.28, and maybe it gets up to 67.60. If I pull this out just even to the daily, you can kind of see it's like there's the 1, 2. So what we're finishing is this third all the way up here. And that suggests a correction. And some people are looking for a whole lot more. And I'm not saying that that can't happen. But as Elliot left with us in a guideline, and within guidelines, a fourth wave in motion will find its terminus within the fourth wave of one lesser degree. This would be a minute third, and there's the minuet third right there, minuet fourth, excuse me. So, and that would suggest that we get back to 63.60 in SPX, but we're going to get above, 6,700. I think we go up to 67.28. So it's still going to be, a $350 drop in the SPX, closer to
So
400.
you're thinking we could go up towards 6,700, 6,800, and then we could go back to 6,400, 300, and those would be your 200-point windows that you might be looking at in the next month.
Yes, yes, and how long it takes, I don't know. I think it could go very, very quickly.
Oh, it'll be quick. Yeah.
My AI continues to suggest that we will get a surge in the fourth quarter. And everybody wants to rely on, October is basically just a down month.
Yeah.
And it's like, well, that's also possible. And I think it could take a month or 6 weeks to go through this correction. And then I do expect them to come back in. And then again, then of course, if we want to just relate it to what they're preparing for now, which is quarter end, then we move from there into year end.
Mhm.
So, but I do think we're due for a correction. And I think if it gets nastier than it is, then all it is really suggesting is that I'm off by one labeling. And so this would be the high, the top. And if that's the case, I got to bring it out one more because it would be that fifth wave of that degree. And if I bring it all the way out, let me go to this one. We would be correcting at least back to the October 2022 low. If not, then I got to go out one more. Here's the basket. Here's the primary fourth wave. So what we'd be finishing, this is cycle. We'd be finishing cycle 3 up here. And it's cycle 3 that I think can go between 68 and 7,000, maybe 72. I've got higher levels, but they're just fib levels. And so they're just calculations. It's a math equation. And so it doesn't mean that that's where the market has to go. I think we all know because we all sit here and we trade and we live in this country. There are many, many things that can upset this apple cart. So I
Yeah.
think
Oh,
that
yeah, of course. Yeah.
once we do begin on that cycle degree fourth wave, our target is much, much lower because that's the box. That's the previous fourth wave. And the high of that previous fourth wave was 1527. We're going to be above 6,700. That's a nasty drop. And the low, of course, which was the 2009 great financial collapse, that low was in the S&P. Let me just get that to shine.
I think it
Um,
was 660 or something.
well, it's telling me 783, but I think it was six.
666.
Was
Yeah, I know, and I don't want to go
666.
with that number, so I always round it up. I go with 667. But yeah, but that's a pretty large window for the market to kind of drop itself into. And so so I agree with what other people are saying is like urging caution, and I wouldn't start a new long here. But I do have some folks that are, positioned option wise. And I met with some of them yesterday, and I was like, you might want to start thinking about your exit strategy.
Yeah. I mean, if
Well,
you were
Jim,
using broad strokes here, just let me kind of summate it for people who might be getting lost in the minutia. Ballpark figure would be you could go up here towards the 67, 6,800 in the short run. Then sometime in October, go back down towards 63, 6,400.
Yep.
And then November, December, go up towards that 7,000. Would that be
Yes,
reasonable?
very reasonable.
Okay, well, that's
And
it.
it could,
And
and
then
the thing is, it
you
could
guys
go
are
up on negative news. We know that, right?
Well, it is a mathematical thing, like Harry, I think, was saying. They have earnings on the S&P, and right now it's at around 270. If we go up 10% on earnings and we're at 300, and you do a multiple of 23, you're going to be at 6,900 on the S&P. And so, bottom line is that if this earning season comes in, it's only supposed to be a 7% increase in earnings. If it goes into double-digit land again, then obviously, just a mathematical earnings times the multiple
Right.
those that's why we're up here. People wonder why these markets keep going up. It's because the darn earnings are there and they multiply it by a number and that gives you the S&P, you know.
Right.
So, anyway, let's keep going here because now we're going to get right into the gold. Before I get into the gold, I did want to say, because I think this is a very major thing, the Supreme Court says that it's okay for Trump to remove the FTC lady, but then they're going to consider her case back in December. But while they're considering her case, she can be on the Alumni Association. And this is reversing a 90-year precedent of protecting members from independent federal agencies from being fired by the president. So I think that might be why gold is taking off. And let's put up
Yeah.
gold now, because if you got the word that this guy can fire every Fed president and every Fed official and put anybody he wants in there, and he wants, because he's a real estate guy, would like to see 1% interest. I mean, you don't have to be from Harvard to figure out that the money market accounts will go way down. People will be panicking out of money market because they're not getting 5% anymore. They're getting 1. And what type of volatility could that cause in the asset markets? And I think would be enormous. So I don't know how you guys were thinking, but I thought this decision here might be one of the instigators for the gold taking off $75 today. Let's start off with well, since you got the chart up, you want to do your gold thing, and we'll work in
Sure.
reverse.
But I just wanted a clarification.
Yep.
Was the Supreme Court is allowing Trump to fire the Fed governor?
No.
No,
But it's the same idea. It says it's okay to remove a member of the Federal Trade Commission.
FTC.
And
Okay,
then
got it.
basically, and that's a 90-year precedent protecting members of independent federal agencies from being fired. So, I mean, obviously, if they get this thing to go through, there's a precedent, and these courts work off precedents.
But
So,
is
but again, this is,
is the Fed really a federal agency though? Isn't there a lot of
The
debate
Federal
about that?
Reserve, no, they're not.
No.
they're an independent federal agency, but that's what this lady is too.
Well,
This lady's, yeah.
anyway, I don't know. Maybe we're splitting hairs, but I don't think the Fed is technically a federal agency. But maybe it's a distinction without a difference.
Yeah, I'm not, like I say, I
Yeah.
didn't get my grade GPA was
Yeah.
not quite as high as him. I do know what this sounds like, and it sounds like he can take people out of there who for 90 years couldn't be taken out. That's my cliff notes on
Right.
what this thing
Yes,
says.
and I think that's important to mention, so I agree with you on stating it.
But let's look at the gold because it looks like it's breaking out like it wants to. Is it breaking out on one of those wave fives, and now it's going to go into a 1, 2, 3 down?
But yes, but this is
But the
similar
wave five, who knows where it stops? Yeah.
similar to the stock market. I mean, well, no, I've got some levels here, but I just got to open this up so that we can actually see them. Hold on one second. I bring that down and then I go like that so you can see these levels. Well, basically getting ready to touch 3,800. So we're looking for it to complete this little small five, and that's going to complete this five. So once again, we are working on completing a minute third, and this third covers all this magnificent rally that we've had because it started back at 1823. So it's quite the rally. It's a $2,000 rally in the price of gold. But I think
Mhm.
we actually can get up to about 38.95 to 3900 into that zone because
Right.
there's the fibs that go along with that level. And again, folks, these are just multiples. These are not common levels, but you learn when you do Fibonacci how you can multiply to give you your next levels up when you get a market, excuse me, that is moving as fast and as hard as gold and in silver. So I think that we're reaching a point where we can have a correction. But let's say we get up to 3,900 or possibly even 4,000. Because look at what it took to get us all the way through 3,700 to the upper 3,700s. A day. Took a day.
Oh yeah, once they
So,
go.
so once we're in that, then we're going to correct. So I put the this five, that five, and the three on top of it. And again, using the guidelines, I will be going down in a minute fourth wave, and it's going to find its area of support right here. Here's that box. And this is 3,300.
Hmm.
But again, like the S&P dropping 500 to 600, dollars, gold dropping 500 to $600 is going to be a sizable correction. And
Oh
it's
yeah.
going to rock a lot of boats.
Oh
But
yeah.
I think we go from there and then we start heading towards 4,000 and above.
And above. Harry, what's your point on this one?
I almost agree exactly in terms of price. I have when I look at the GLD, which to me is the Spider Gold Trust, and one of the more reliable indicators of the price of gold, at least in my half a century of experience. You can take a look at if you look at the angle of ascent on the GLD. Let me share my screen.
Yeah, share your screen.
Let me get that up there. Hang on a minute. Okay, where is it? There it is. You should see it now.
Almost. There it
Yep,
is.
we got it. Yep.
Okay, and you can see that going back long term, there was a triple top in the range that we saw about 186, which is about 1800 in gold, something like that. Broke out in early 24 in the first quarter after performing a flag. Let me scroll in a little bit. Right there's the breakout, right here. And since then, we've gone from 179 to 344. And if you look at the channel top, it angles up towards 390, which is equivalent to 3,900. So give or take something like 3,850, 3,900, maybe 4,000, like Michael said. But this is one of these parabolic moves that you usually see in a tech stock, like Palantir looks like this, for example. You
Yeah.
don't usually you don't see this in gold. So
No.
when you get this kind of blow off in gold, and my close friend and former subscriber to my site, who I encourage to get his own site by the name of Avi Gilbert. You know Avi Gilbert?
Oh yeah.
Avi's one of the premier Elliott Wave specialists in the world. He has a site called ElliottWaveTrader.net, and his numbers are the same as mine. He says that market-wise, the S&P's in the fifth of the fifth, just like Michael said. And I think that the gold is at a parabolic blow-off level too, and he feels like both gold and the market maybe coming down at the same time. If the market turns down, gold might just turn down with it.
So what do we do on your chart here? I mean, are you looking for it to go to the upper limits of the angle there near 405, 382,
Yeah,
405,
yeah,
or
somewhere in the 390 range, give or take,
yeah,
$5.
390 plus or minus 10, something like that. Yeah.
And all you have to do is look at stocks like Newmont,
Yeah.
which
Right.
which is a 4-year high, right at its old all-time high up here,
Yeah.
and AEM.
Oh yeah.
These are all parabolic moves from the major goals,
Absolutely.
and it's right at the top of the channel too. And if you look at the long-term chart, this is all-time highs. Now, what is it saying on a long-term chart? Way back, that the possibilities of this being a $500 stock if gold goes ballistic to 5,000 is a possibility. So all of these golds, no matter how overbought they look, they have extreme momentum to the upside. Now they can break at any moment, but the trend is your friend, and the trend is still up. And until they break them below support, below the trend lines, below moving averages, there's no reason to go short anything. I think it's dangerous to short any stock that has momentum until it actually breaks a trend line, moving average, and key price support initially. And
So
you'll
what would NEM look like on a longer term graph? Does that have some ridiculous price in front of it too? Or all uncharted territory?
This is uncharted territory for that stock. Really, it is. I mean, it's up against the all-time high from the 2022. And Newmont's Royal Gold's another one, RGLD.
Yeah.
Then this is a real class operation. Let me tell you, I've
yeah.
met a lot of people. Royal Gold is considered, along with Franco-Nevada, FNV.
Yeah, right up
these
there.
are the two. Look at this thing moving too.
Yeah.
Okay, but
that's a royalty play. Yeah.
It could be 300 before it's all over, and the stock's only 214 now. But
yeah.
I would think somewhere that this is a 1, 2, 3, and so if we get a fourth wave, you may get a fifth wave on a lot of these, and that's where the blow off comes. This is why the market, it's dangerous here, but at the same time, it's dangerous to go short.
Yeah. How about Pan America Silver? Is that thing going to blow off, go up to 40, 50? PAAS. PAAS.
I know, but I like Wheaton better. Wheaton and precious metals.
Look at it. Yeah. It's a free country. You can look at both.
I like that better because PAAS has its triple, quadruple top up here and hasn't even gone through it yet.
That's not good. Yep.
So it's a
so let's look at Wheaton. Wheaton's a better deal.
Oh yeah, compared to Wheaton is
a Cadillac.
Yeah, it really is. And also we're approaching its multi-year. How many years is this? 10-year channel. If he gets up to 125 or thereabout. So these are all near end stage.
Mm-hmm.
Whether they go further, another story. But if you're in it, you don't want to sell it, because all I would do if I was a trader is keep raising your stops.
Trailing stop.
Mm-hmm.
Yeah. Let the market take you out. Hey, Eric,
Right.
You do mostly on the stock indexes, but you stick your toes in the water on this stuff. Do you have a feeling on the silver and gold?
Oh, I've got lots of feelings.
You're a feeling kind of guy.
Oh boy. Well, that's why we kind of do things the way we try to do them, with a little bit of automation to take our feelings out of it. But that's another story.
Yep.
Gold is up, I think, year over year, something like 45%. And look at the dollar. I think that kind of explains it. It's just, especially this year. And like you mentioned, the Trump administration and quite frankly, just about any president wants to juice the economy any way they can. So, part of that is, at the risk of instilling, a higher CPI, they're willing to just, depress the dollar and stimulate the economy and all the above. And that means in general, more money printing. And so that's, the inflation of the currency is what creates price inflation. And alongside that, that's what gold has been sniffing out for quite a while now. And I don't know how that dynamic really changes. So as much as I would, excuse me, guys, as much as I would like, today, I think is an all-time high in gold, isn't it not?
Yes, it is.
And silver,
yes.
I believe.
No, not silver. Silver's got to go to 50. So silver's
silver's not all-time high.
No, silver was above 50, was it? Or was it? Okay.
Yeah. When the Hunt brothers were manipulating it, it was over 50.
Oh, okay. You're going back. Okay. I was thinking back to 2010 or 11, was it?
2011, it was.
Yeah. Okay. So yeah, in that case, we've just been, quite frankly, when I say we've been recommending to our clients that are involved in, the traditional asset classes, or I should say traditional commodities like gold and metals and things like that. We've been bullish gold for a while, and we've got some clients that are just been hanging on and absolutely killing it. So we're not changing our tune at the moment, but that isn't to say that when you get these moves like this, these shorter term moves, that you can't maneuver and trim your positions and look to add back on a dip and that kind of thing. I mean, that gets a little more cute and tricky at times. And that's why it's good to have a roadmap like we're looking here on these charts and have something to go on. But a lot of it too is position sizing and being able to maintain your position with the right sizing and then using those opportunities, those dips and rallies to sort of manage that position, not just be passively long or short. I think that's kind of a rookie mistake a lot of people tend to make when they're obviously starting out is, oh yeah, I mean, this market XYZ is going up and I'm just going to take my account and I'm going to buy as much as I can of it. And that's really not the best approach. So I don't know, but that's kind of a lot of food for thought. I was looking at Jim Bianco. I don't know if you know who he is.
Yeah, sure.
I'm sure.
The
Yeah,
interest rate
but
guy, yeah.
he had well, in fact, could I share my screen real quick?
Sure.
Since we're on that topic, I don't want to hog the airwaves here, but
No. Love to hear what he's got to say.
you seeing it there?
Yeah.
Yeah, I think you are. This chart here, did it show up?
Yes.
Okay.
Yeah.
So yeah, he's talking about, here's this blue line here is the dollar. So it's only been in 72 and 86, it's only seen basically two worse years. And then all these gray lines here are the return for gold, I believe. So anyway, it's kind of interesting. Let's see, this year is still tracking worse than 1981 in terms of the dollar. So basically, he's saying, just pointing out the dollar is on a real measured downtrend here. And
Yeah.
as long as that maintains,
it stalled out a little bit, but it could accelerate to the downside. Huh?
yeah, that's right. That's right. And then this was interesting too. I just did a presentation the other day and it just kind of reminded me, here's gold versus the S&P versus the Russell 2000 over the last 20 years. So, I mean, it's kind of something that just quietly been performing, overperforming. And this is, I think, 2 years. I think this was updated last week. So numbers are a little different, but still you get the point. So anyway, we don't think people should be running away from gold just because it's at an all-time high, but tread lightly, like with anything. So that's kind of my summary on that.
Yeah, I just wanted to bring up a couple of points that might be interesting. M2 money supply in 2023 was minus 5% about, and now it's plus 5%, meaning it's rising, and it's on an upward trajectory. So I think that liquidity jump also has a lot to do with what's happening. And then the last thing is, Besant is on TV here talking about bailing out Argentina. And Argentina was just about ready to fold like a tent, and now their bond market and their stock market are having record rises because he has made some kind of a pledge to support the Argentinian situation. And all of this stuff sounds like just more printing, more liquidity, more printing. So I think you put all these things together, and there's no question why gold has been performing like that because we've been a liquidity provider through the roof since '08.
I wonder what the outside reason for trying to support Argentina is.
Well, I hope it's not because he told all his hedge fund buddy to go long Argentina 2 days ago.
You never know.
And then if he didn't do it, what did Lutnick do with his two kids running Cantor? So you know what I mean. There's a lot of stuff going on in the world now. Yeah.
What do they say? There are no coincidences.
Yeah.
Very well stated, Eric.
Now, Harry's a New York area guy. What do you think's going on with that? Any trading going between the White House and these things we hear, or what do you think, Harry?
I mean, it would be purely a guess, wouldn't it?
Yeah, it would be. It would be.
But knowing Trump, and I mean, I'm a supporter, but at the same time, I don't, I like some of the things he's doing, but I think from a personality standpoint, he's an idiot.
Yeah.
I can't get over the way he conducts himself. But he says some of those ideas are great. I'm a Republican, period. I'll admit it. But at the same time, but I mean, the choice between him and Kamala to me was, there was no choice.
Yeah. No, and not anyone is all one person. You know what I mean? So
Right.
that's why he's a hard guy to work with sometimes, because there are some things that he does that are not terrible, and then there's some things that obviously you frown upon. But I mean, when I hear Besant is turning the whole Argentina thing around, and he worked with Soros and Druckenmiller and all those kind of guys, it's hard to believe that he keeps a secret that well.
You're not kidding.
Well,
Anyway,
I
that's
would just
neither.
point out, I would say real quickly, the issue they're having in Argentina, as I understand it, is somewhat, well, not similar, but maybe you could draw a similar corollary in terms of what in the US. I mean, the idea is, they've been pressured well, he's under pressure to lower rates, but he's afraid of inflation, price inflation. So they're kind of in a conundrum. They're kind of in a bit of a box. So I don't know. I mean, the only reason we get away with it is because I guess we're the best of the worst, and we still have some credibility and the superpower, and we can
Yeah. We
kind
have a
of
growing economy. We have a growing economy that spits out money. So it's kind of like lending a guy money way over his head, but he still has a good job, you know?
right. Yeah, there you go. So anyway,
Mhm.
it's all this stuff is so interrelated and
Yeah.
correlated. It's kind of fascinating.
Now, Harry, did you have some stocks you want to put up your machine there and go through some of the things you've been having some fun with? Because you do, between you and your trading room, you guys are always come up with some ideas, you know?
Well, there's no question. Our swing trades are going off the. I mean, we
Very
talked
good.
about it last time I was here.
Right.
Okay, the stock of the year for me is OKLO.
Oh, yeah.
I
Yeah.
mean, I don't know. Should I? You want me to share my screen again?
Share your screen so we can see some of these things. Yeah.
One sec. I gotta get up to. I gotta get the share. Where are those share controls? Hang on a sec. All right, there they are. Okay. You should see OKLO in front of you.
Almost.
Not yet,
There
but
it
it's
is.
coming. There we go. Yep. Oh
Now,
boy. Yeah.
we've been long. First, when it broke out here in the teens, we
Mhm.
sold a lot of it up in the 50s, and when it broke back out here, we went long. And we've stayed long only with because we were looking for 5 waves. Check this out: 1, 2, 3, 4, 5. Spike up not only a fifth wave top. This is but it's at the long-term channel top as well. So we took our money off the table at 140 today. 140 from 12. So it was a more
Yeah.
than tenfold runner in about a year, but it was worth it. But there's we just found a bunch of new ones today. Just this morning, I put this one out, Kodiak Sciences, which is look at this long-term base pattern,
Hmm.
and it broke out of a coil, perfect coil. And when it started to break out this morning, around the I think it was 10 or 10 and a quarter, something like that. Let me show you the intraday pattern. It exploded, pulled back. That's where we bought it, right there on the pullback. It was 11 and change, and it closed 15.28 after being as high as 16 and a quarter. And that's a swing that basically turned out to hit my targets in one day. Sometimes you get lucky, right?
Hmm.
There's a few others out there we really like. The um, quantum computing stocks, QBTS, which I showed you guys last time I was here. Check
Sure.
very similar. Look at this chart. I
Oh
mean,
yeah.
break out of a base, a beautiful wedge, another one, a little flag, another flag, and a breakout. My projection on this is that this could be double from where it is now, even in
Hmm.
this market. Because I got to tell you that the tail end, look, I'm in my 70s and I've been doing this 50 some odd years, and I can tell you right now that the market always goes further than you think it's going to. And at the very tail end of every market, the speculative stocks, the in vogue groups, what's in vogue now, quantum computing and nanonuclear energy. Those two
Yeah.
groups are the two hottest groups in Wall Street. If you take a look at, and this is a quantum stock, and this is OKLO is a nuclear energy stock. But
Right.
you can go through a bunch of them, NNE and
Yep. Yep.
SMR,
SMR. Right.
and even a low price one, Lightbridge, LTBR. They're all ramping up. It's phenomenal charts. Every single pullback has been bought in this stock, on all of them actually. And so I tell everybody, do not short these, number one, and secondly, no reason to sell them. Just keep raising your stops. Where do you raise them to? Below the last pullback low, or go into 15-minute chart and take a look at the last lows in this area here. and then this is your support level right now, 17. That's where I'd be stopping it if it suddenly collapsed. And the same thing goes where every stock I trade, I look for potential stopping points below previous lows or if the trend lines and moving averages are being broken, or all three. And when moving averages roll over and the stock rallies back to a declining moving average and fails, that's the perfect spot to short something. Yeah, let me show you some boxer shorts if you have a moment.
Sure.
These are stocks. Look at this 5-year head and shoulders top. And it broke down from the rising wedge. We went short about 93. The stock is 78 and fallen apart. Sezzle. Now, this is a real market favorite. And we were long the stock from the low teens into the 150 range. But take a look at the breakdown, bear flag, breakdown, bear coil. And if this breaks down from here, this is going to be a $40 stock. It's 91 right now. And the same goes for
what are they into?
Financial services.
Oh, financial services. I didn't read that. Okay.
And then SEZL. You ever hear this company? Sezzle? Oh, I'm sorry. Root. ROT. Same pattern.
I heard of it. I don't know that much about it though. Yeah. Okay.
Insurance. How about insurance went from 3 to 175? Yeah. It's amazing. It's amazing to me. But see the breakdown in the bear flag right here? If it doesn't break out, it starts to roll over. It's a $65 stock trading at 102.
Mm-hmm. Hey, Harry, what do you think about
maybe they got some. Who?
Riot, RIOT.
Well,
I got that one going. Let's hear that one.
Look, I also, let me just say this. I'm not a big proponent of Bitcoin or anything crypto. I just really feel like maybe I'm old school, but something stinks there. I don't know what it is, but
the valuation stink.
There you go.
Yeah. Well, it's not just that. I don't trust it. I don't know what's behind it.
Yeah.
You know what I'm saying? You know the whole get ball of wax.
Oh, yeah.
But now, the good thing about Riot is if you take a look at this declining top sign, it goes back 2 years. It broke out.
Yeah, totally.
It's not quite past the all-time high up here, but this stock hasn't been made a new high in 2 years. While a lot of those stocks did. If you take a look at CONL, and this is the ETF for Coinbase.
Huh?
Same thing.
Right. Yeah, somebody was saying do this instead of Coinbase. It's cheaper, I guess. Huh?
Well, not only that, but we went long
for options.
Left shoulder, head, right shoulder, breakaway gap. We went long on a breakout. From the flag, it exploded. It literally went from 19 to 70 in a month.
Right.
Yeah. So, but none of these have made new highs, while Bitcoin making new highs. So, what does that tell you? I think there's something rotten in the state of Denmark when it comes to Bitcoin.
And MicroStrategy is going nowhere either, and that was the poster child for Bitcoin.
That's right.
Yeah.
This actually looks better than those two. Because if you look at the long-term pattern, it's a better chart.
Yeah, no, it could still go as long as it stays above 320.
And the play here is MSTX. No, I'm sorry. MSTX, is that it? Yeah. Is that the short? Yeah, that's the long. But look how weak this is. This is a double long MSTR. And the high was 229. It's trading at 23. 1/10 of where it was. What does that tell you? So...
it's losing altitude. It's losing its legs, is what you're saying.
Yeah, I like Mara better than Riot, but even that one. Look at this. Look how relatively weak it is compared to. I would avoid Bitcoin and anything crypto related right here. I think they're way extended.
What about Applied Digital (APLD)?
That's one of my swing trades. Applied Digital.
It's been a friend to me.
Yeah, now see the explosive move in the falling wedge. When it broke out of the falling wedge, I went long here around 10.5, and the stock has more than doubled. Right. It's up to mid-20s now, and it's extended, but it's not necessarily hasn't made a new high. The new high back here was the all-time high was 33.5. So it might have some room to run.
Is Soundhound going up to 25 or what? SOUN?
Yeah, I know it well.
Or more?
1, 2, 3, 4. This has got an interesting chart pattern. Here's a long-term pattern. I would think that if it does go, all of these could blow off. I don't know if it's going to blow. This isn't crypto related, is it?
No. This is they do the sound when you call up a company. It's not a person anymore. It's some guy talking to you.
Okay,
large language model.
Artificial voices.
Yeah.
Yeah.
And they got a backlog of business, choke a racehorse.
Yeah, I know. Anything like that, that's Palantir and Cetera. I think they're all vulnerable, but they don't like this one in particular is making look at the higher high on unbalanced volume.
Mm-hmm.
And the stock hasn't made a higher high. This is a very positive technical divergence, which indicates to me that this is probably a mid-20 stock. So something
Oh,
to
yeah.
keep an eye on, Jim, in the next
Yeah.
week or two, because
Yeah.
it's being accumulated, but it isn't really running yet.
Yeah.
But when it blows off, it'll do one of these blow offs like it did here and here. You may get another one into the 30s and 40s before it's
And it
over.
might be December, or November, December when it happens. But if you have a limited risk option that expires in December, you can go to sleep until then if you want to.
That's right.
So, all right, I'm going to switch over to Erik here. And Erik, I was wondering if you could put up some screens and maybe give a few sample ideas of things that you've been up to that have been successful and why they were successful and that kind of stuff, or give some kind of a viewpoint on that kind of thing.
Did you call my name?
Yeah, I said I was
okay.
hoping that you could put your screen up and then
Okay.
basically you could show what some of the trades that you've been doing with the credit spreads or anything and why
Yeah.
they worked and why you thought they would work.
Let's see here. In fact, okay, here, let me switch. All right, I can show you this. Here's an idea if you want to
Yeah.
look for something moving forward that's completely unique and unusual. All right, let me share here. Looks to me like you're looking at the screen.
Yep.
Yeah, so here's a what we call a dragonfly option spread. So we talked about the S&P earlier, and I think we were sort of all in agreement that you don't want to necessarily go short, but you wouldn't want to like buy heavy long right now either. So maybe to
Mm-hmm.
summarize, so here's more of a non-directional approach for the December E-mini S&P 500.
Mm-hmm.
And this has 31 days till expiration. So you can see the market trading right here. The vertical
Mm-hmm.
line is your expiration date. And this is the structure and the setup for the calls and the puts where you sell 4 calls and 4 puts. You buy 3 further out of the money calls and puts, and then 1 closer to the money as additional insurance or a hedge, I guess you could call it, because it's
Right.
closer to the money. So there's no uncovered trading, there's no naked strategies. Every short option, there's a long option. And we like these kind of trades every now and then because they allow you a lot of margin of error. Like, you can bounce around a lot in this area, and
Sure.
the trade does just fine, and theta decay starts to work its magic. This one here is collecting $278.50, and the idea would be you close that out before expiration, usually capture 70, 80, 60% of your profit target. You can capture that usually by, it depends, of course, on the volatility, but maybe after 2 or 3 weeks. So you don't hold these till expiration. And in terms of what we have done lately, let's see here. I can show you some of the closed positions. This is just a demo account I use for presentations. I usually have 1 or 2 a week, and I just randomly choose some trades. And then this is the result here. So let's take a look. You can see you can filter your positions any way you want, but basically you show 20 trades on one page. You can see there's 13 winners and 7 losers. And you can see the short positions. There were 11 trades and there were 10 winners and 1 loser. And then out of the bot positions or long spreads or debit spreads, you had 3 winners and 6 losers. And that kind of makes sense because anytime you buy premium, it's a much lower probability outcome compared to selling or collecting premium, at least in the way we
Mm-hmm.
do it. So, here's an example. I won't go on and on about it, but just get an idea for, maybe here's an idea here where on August 4, you did this Condor trade. And I'm highlighting that and just going back in time so you can see this is kind of how it played out. And you can see the blue line here is the profit taking signal. So that's all automated. So basically, the trades are all set up for you, and then you get the profit-taking signal, and then it closes that position. But that's just an example of a non-directional strategy. So we've been doing some of that. Of course, you're going to have take your hits every now and then too. Last week we actually did before the Fed, we actually sold some condors and some other spreads. And after the Fed announcement on that pullback, we covered everything and got out for break even, which was a good victory for us because, as
Mhm.
you know, the market ran pretty good afterwards, and so we got out of the way of that one. But so yeah, that's just kind of some, you
The
know,
environment that is most dangerous for the condors and the spreads and the multi-legal, is it a lineal move? Like say, so it's nothing, no time's coming off the clock and the prices are moving very fast. Is that
Mhm.
generally the worst, shall we say, environment, at least short term?
I think the worst environment would be you place a trade like a condor or a dragonfly, and the
Right,
market makes an immediate sharp move.
right.
So there's no chance for theta decay to work.
Exactly. You
And
need to get some time decay off of that thing
right.
for it to be. But what do you call it? Because you have the different hedges on, it does mute the thing a little bit or quite a bit.
Yeah, yeah, absolutely. So
Yeah.
if you're looking at like I said, the dragonfly that I showed you earlier,
Hmm.
let's see where was it? It didn't matter. But anyway, so yes, that the dragonfly, here it is. It's a little more robust than a condor because you own this particular call that's closer to the money, in this case
Right.
50 points closer, and you own this particular put. So, if it
Mm.
runs up on you and you have a condor, you don't own this additional call. And
No,
the
that
delta,
that that is a key. That is a key. If you think there could be some real volatility between now and the end of the year, that extra put at 6,300, that extra call at 7,000, that is a pretty good, band-aid on something that's going crazy.
yeah, yeah, it makes a big difference in certain
Yeah.
circumstances where the condor will be taking a loss and the dragonfly does not, and it ends up being a nice winning trade.
Mhm.
And you can also stick with it a little bit better because, when you got writing strategies, obviously time going by is your key. So you do have to get a lawn chair and sit a little bit. And so it's a lot easier to sit knowing the 7,000 call will be worth 50 if it goes to 70 50. And that 50 could certainly be used to do some offsetting on the other
Right.
stuff.
That's right.
And
It just gives you more room for error, margin of error, and
mhm.
allows you more patience.
Yeah, no, and then patience is the key because, time going by is what writing's all about.
There you
Uh,
go.
Yeah, so that's very interesting. That extra position, and that's why it's called Dragon as opposed to just the other one, huh?
Well, we just made up that name for it years
Yeah.
back, called it the dragonfly. It has six legs, and I think at the time I thought, well, doesn't a dragonfly have six legs and or wings? And I don't even know if it does, but that's what we stuck with.
Hey, it's a cool name anyway. You'll slice it, right?
Yeah.
Yeah. Michael, do you want to quickly jump on and give a couple of quick ideas that you might have, and maybe
Um,
put your screen up there?
well, to tell you the truth, I'm a day trader.
Well, then
Um,
show us a couple of day trades that look like they worked out pretty good lately. Or
um,
don't some show a chart you would use to kind of come up with your day trading thing a little bit, maybe.
well, I'm going to show you my trading screen.
That'd be fine.
And so, and this one though, it just depends on what your style of trading is and what you want to do. Now that's a 2 minute screen, and I need to go to something a little bit larger. So that's the whole thing. And it's just like being able to catch these moves. And the market's being extremely volatile inside that hour. So, and when you're trading futures, you could end up down three times the amount that you made while you're waiting for this all to come through. And this one actually was built on shorting it up in here. And so letting it run and then catching, it actually did come back down inside that. But if you know what you're doing, you can, this is where it is. You can catch it. So you just, I think I started shorting it here. And it just kind of ran and then it ran and then it ran. But I just kept adding because I realized where the market was and I realized what it was should need to do. And I know um, if you're just kind of following along, algorithms, you just kind of, if you can understand the algorithm, you understand what they're going to do. And so at one point, what I ended up doing was if I'm going to be selling that, then I also was selling some puts. And so in the Qs, because this was the NASDAQ. And so um, taking advantage of that, and then when you start to take it off, you just reverse it. and it ended up that was the total for the day on that type of a trade. But they're fast. They aren't super complicated, but other people, oh, I want to trade that with you. It's like, okay. But I just have to tell you, you have to know what you need to go into that's not on your screen because you could take a lot of heat with your trade. And that's where you kind of you sell off that risk in a way because in this case, you're selling puts.
And you also do something with gold as well on a daily basis sometimes?
Um, I just can I be honest? I just get
Sure, why not?
long.
Okay, so you're not trading it. So the thing you're mostly trading is the S&P?
No, actually, my main tool for trading is the Nasdaq future,
Okay, okay.
and
The
AKA the beast.
NQZ, that type of thing.
Yes, right now it is December, yes, but it's I nicknamed the Nasdaq. It's the beast.
Uh,
Um,
is that a good way or a bad way?
well, in both, because right now, as we mentioned in the beginning, and with all of this preparation for end of the quarter, and then what we got like 3 days before that, 3 trading days before that, we have a Friday expiration. And so, if you're trading into these markets, you've got to kind of understand what they're going for. And so within the Nasdaq, like look at it, we all see it. Apple up 10 and a half. Tesla was up 17 or 18. And then if you understand Tesla and you know how it trades, it's all coming into the options and it came in early. So it's like, well, you just got to keep an eye on it when they're done, when retail or whomever it is done moving it in, but they're rotating. They're rotating a lot. Like Nvidia. Nvidia had trouble getting above 179. Then suddenly somebody said, well, I need that. I need that stock. And what does it do? Bing. And when you can see that, you know that this is just going to go in one direction. It's just going to
Sure.
go. So for me, it's just being able to look at all of it and realize how you're going to fit that into what your future is doing.
Sure. Why don't you tell people how to get a hold of you here, and David could put up your contact information, and if you have any
Sure.
special offers or something.
Well, you can get a hold of me by my email address is michael@mjf1partners.com. And right now I am the partners. So, but I always answer my emails. You can ask questions. I also have a channel on YouTube, and I present a morning update, and then I also do a daily update. And then I've converted my weekly updates I'm using my podcast again. So it's Eye of the Storm podcast, and I publish that primarily some on Friday, some on Saturday, and I cover gold, silver, platinum, and then I also cover the S&P, and I go over the SPX and the futures market. Same in the Nasdaq. I also bring in the Qs. I also am real big on gamma. And you being an options professor,
Mhm.
understand gamma. And my entry into trading as I was a market maker from 1979 till basically 2011. And I was on various trading floors. So I love gamma and I love theta. And if you know how to work it, and now there are algorithms that can kind of tabulate and they kind of put it through to where you're going to find accumulated gamma.
Sure.
And when it breaks, i.e., a call wall or a put wall,
Yeah.
it's real fun.
Exactly. Hey, Eric, do you have any seminars coming up and how people can get a hold of you? Maybe go to the seminars?
Yeah, in fact, the best thing to do is just go to altavest.com and we've got a link right on the home page. People can sign up and get our demo account and our trade alerts, and then we'll keep you posted on all the webinars and so forth coming up. So absolutely. Yeah, right there on the right side.
Perfect.
Just click that
Perfect.
link and you'll have access to all of our technology and you can use it with a paper trading account and kind of take a look for yourself at what we're doing.
Excellent. Harry, you've got that great room you run every day. Can you give people some insights on how to get in there and what you can do for them?
Well, yeah, we have a room called the techtrader.com, thetechtrader.com. And we're always offering a 2-week free trial where you can come in, no credit card necessary, join us, get complete service, and see what we're up to. I think it's a kind of place that's conducive to making money. I have some brilliant traders working with me for years, some of them as much as 20 years with me. So it's a place where we use 1 minute intraday charts for day trading, and we do swing trade advice as well. Our swings have been off the hook this year. And so come join us at thetechtrader.com. Check us out. I think if you'll see what we're up to, you'll want to join us on a permanent basis. It's a place to learn. It's a place to make money.
Great. As far as option profession, we do have a very large webinar coming up October 8th with trading indicators. So it's going to be very well attended. If you'd like to get the link, just send an email to optionprofessor@gmail.com, and I'll make sure the link gets into your inbox, and then you can make arrangements to be there for October 8th. It's going to be very exciting because earnings season starts October 14th. So there'll be plenty of ideas to take advantage of the earnings season, which I always find to be one of the better seasons to try to get volatility. Thank you, Erik and Michael and Harry for being here. I think we covered a lot, certainly, and hopefully everybody enjoyed it, not only live, but also when it goes on YouTube. And we'll be talking again, you guys. Thanks a lot. I'm going to send it back to David now.
All right. Thanks, guys. Great discussion today. So just a quick reminder, be sure to subscribe to Timing Research on YouTube, Substack, and your favorite podcast app. Also, you can just go to TimingResearch.com, and this post will become the archive for today as soon as I can get it processed. So just want to thank my guests again for today. Erik Gebhard of AltaVest.com, Harry Boxer of TheTechTrader.com, Michael Filighera of LogicalSignals.com, and the Option Professor of OptionProfessor.com. Thanks, everyone.
Thank
Thank
you.
you.